In today's lesson, we're going to talk about institutional order flow, and how it affects price action in the markets. For our purposes today, we'll use these adorable green bulls and red bears to represent buyers and sellers. If I have an imbalance of more buyers than sellers in the market, that will cause price action to go up. If I have an imbalance of more sellers than buyers in the market, that will cause price action to go down. If I have equal numbers of buyers and sellers, price will consolidate and move to the side. When financial institutions step into the market, they place very large buy and sell orders. Because they place such large orders, they are often capable of eliminating the majority, if not all, of the buy side or sell side liquidity in one fell swoop. Suddenly, because this bank placed a large buy order, there are no sellers left at that limit price where the bank was willing to buy. Now, the bank is only willing to buy at that specific limit price, but for all of the other buyers in the market, if they still wish to execute a transaction, they will have to travel further up the road to all of the other sellers that are willing to sell at a higher price. And so you see price actions start to move up in the market as they execute these transactions at higher prices. Let's see what this looks like on a chart. Here we have an imbalance of more sellers than buyers in the market. As they execute transactions, they encounter buyers along the way, but because the sellers outweigh the buyers, price continues to move down. Suddenly, the sellers come upon this huge group of buyers, including institutional buyers, and because there's so many buy orders at that level, the sellers are stopped dead in their tracks. Now, they fill some of those orders at that level, but in this case, the buyers actually outweigh the sellers, and because there are more buyers than sellers, price actually reverses direction and starts going up as those buyers go and execute their trades in the market. Suddenly, they come upon an area of hesitation where there's a bigger group of sell orders sitting there. But other buyers also jump into the market, including potentially other institutional buyers, and those buyers continue to outweigh the sellers at that price point, and price continues to move upwards. And this is really how price action moves. All price action is driven through imbalances in order flow. Eventually, the buyers encounter this huge group of sellers, including institutional sellers, and once again, price reverses direction as the sellers outweigh the buyers. Hopefully this lesson will help you understand how market movement occurs and how price action is driven in the financial markets through order flow and institutional order flow.